The main difference between VOO and IVV lies in their ETF issuers. VOO is distributed by Vanguard, a well-known company in the asset management sector, while IVV is issued by BlackRock, also a prominent player in the field. Vanguard's VOO is an indexing investment fund that mirrors the return on investment of the Standard & Poor's 500 index. In terms of assets under management, VOO has $325,714,712,538, whereas IVV has $342,279,931,285, with IVV actually having more assets under management than VOO by a margin of $16,565,218,747. This high level of assets under management typically translates to improved liquidity and reduced slippage, making IVV easily liquid. The annualized returns of both investments are broadly comparable, with IVV returning 6.85% and VOO returning 6.86% year-to-date. Over the last 10 years, both investments have produced similar outcomes, with IVV having an annualized return of 12.73% and VOO slightly leading at 12.76%. Despite their differences, VOO and IVV share many similarities, including their use of a passive investing method, high-volume assets, and the S&P 500 index as their foundation. Both have a Sharpe ratio of 2.39 and aim to invest in U.S. stocks. Ultimately, the choice between VOO and IVV comes down to personal preference. As both ETFs are low expense and highly liquid, VOO's annual return is slightly higher, but IVV is still a worthy contender. Both options are equally good, offering investors a reliable and low-cost way to invest in the S&P 500 index.